everyone, it's Evan here from the Trade Risk on Tuesday, February 27th here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So let's jump in here today with the S&P 500. We'll go right to that weekly chart, get that bigger picture perspective. And you can see here on the week now, we are down 33 cents in the SPY ETF. That's 12 basis points lower. And if we look at the candle here, you can see we get a little bit of this kind of topping tail that is forming. It is really early. It's only Tuesday, so we still have plenty of trading left to shape this weekly candle. But when we look here at the broad strokes, what we can still note is we are above a rising 8-period weekly moving average, or above a rising 20-period weekly moving average. And when we take a look at this bigger context here, we're kind of in the middle of this range if we want to use the range as the lows from 2 weeks ago here from Friday the 9th. 252.61 is about where the S&P 500 tagged, and then on the upside, the all-time highs from just recently, right around 286 or so. So you can see we're just above the midpoint of that, about the 55-60% or so retracement, and you can see kind of we've had this nice recovery over the past 2 weeks or so to really push us off of these lows, and you can see the deciding kind of or the indecision now is starting to set in as we get a little bit higher up in this retracement rally. So that is the landscape overall on the weekly time frame. But when we zoom out, you can see trend very much intact, a little bit of volatility expansion here, the main trend lines held, and so far we're in the process of trying to bounce and holding above some key moving averages. So things look fairly good there on the monthly, on the weekly chart there, not too much to complain about. And now when we get back down to the daily chart here, this is where things get a little more interesting, and this is where time frame is going to be very important. So depending on your time horizon, the things we're about to talk about may or may not impact your immediate trade decisions or positions that you have on in general. So very much you want to keep that that time frame component, that variable in mind as we talk about what's going on here in the daily chart. So if we recap briefly, and we went over this on Friday in our weekend video, but essentially last week we spent all of last week chopping around in this 5 or so point SPY range, fairly emotional trading back and forth, no follow through one way or the other until Friday, which was this session right here, where we had this strong finish to the week. We had no follow through to the downside there. Sellers could not get that going. We saw this nice push higher here into the end of the week, 1.6% rally to the top of the range, and basically the strongest close that we've seen since the reversal here back on February the 9th. So the basic takeaway here was this was an initial constructive sort of day one rally, and what we really wanted to see was coming in here on Monday, we wanted to see follow through to give us some more confidence that bulls are in fact pulling us away from this range, and we are in fact kind of going to attempt to make a second leg higher back up towards these highs. Flash forward to Monday, we did get that follow through. It was as perfect as you could have imagined. It was a strong close, 1.16%, nice bullish strength there on yesterday's close. That was until today, where we saw a complete sort of unravel, which was not so much a very bullish picture here on today's trading and Tuesday, where sellers completely reversed, in fact bearishly engulfed the trading session from yesterday here. So we had that nice follow through day, and then we gave it all back, and then about an extra 20 or so cents to the downside, and we filled yesterday's gap here. So basically, the way I'm looking at this market now going forward, the comments are actually strangely familiar to last Friday. Last Friday, we were looking for follow through to the upside. Well, I'd say given today's action here is a near-term bearish event, right? Bearish engulfing bar in the near term that suggests sellers are in control and they should be able to probe lower for the rest of this week or going forward, tomorrow specifically, we want to see if the sellers can get that follow through day to the downside, because while this is a bearish engulfing bar in the very immediate sort of 2-bar pattern here, we want to keep in mind the bigger picture context, and the bigger picture context is, even though it is very weak at this point, but we have a bullishly aligned 8 and 20 period EMA, not really getting much distance or not really expanding away from each other like we see in the most bullish markets, but we are still kind of in this process of a bullishly aligned price above an 8, above a 20, and we also are still, even though it is close, we are still holding above the bulk of this trading here from last week. So I think the follow-through day tomorrow is going to be very sort of telling. It's going to be very important to see if the sellers here are for real in this reversal, or is this some type of shakeout and just a pullback in a, say, smaller time frame sort of horizon here. So for example, if we were to look at a retracement from the Thursday lows, so basically the swing low to the swing high of this latest leg higher here, right? So from about 270 up to today's highs on Tuesday, right around 278 or so, you can see that we're right in about the 50% or so retracement. So we've given back almost half of the rally here from the past 3 days of trading. This is where we would want to see the bulls step up, is basically around this 50 to 61% level, above this 8-period EMA and above kind of the top end of recent trading. I think there's a lot of confluence right in here, right around this 274 to 272 to 274 level. Just this general range in here is where we want to see buyers step back in and reverse this market higher, or support this market by moving us sideways and then potentially lifting back higher. That would be the bullish case. If we come slamming down through all of this supply in here and we just have another sort of expansion move to the downside tomorrow, that would be a very sort of bearish event here for the rest of the week. And then this weekly chart suddenly looks a little more or quite a bit more pessimistic if we start to follow through and close back around this 269, 270 level. That would indicate that this is looking more and more like a potential lower high versus a potential, here's first leg higher consolidation, second leg higher, back to retest these highs. So that's sort of the way I'm looking at this right now. I think tomorrow again is going to be important. We still do have some SPY long on. So basically we put some SPY on Friday here on the long side. We still have that on. If we got that strong follow through day tomorrow, kind of pushing us back into this range, we would likely be stopped out of that position. But for now, we still have some S&P 500 long exposure here. And we're going to give the bulls the benefit of the doubt so long as we are above some of these moving averages and we are still making sort of this higher low potential from Thursday right here, which started the second leg higher. So that is basically the premise here on the short term on how we're navigating it. I think the levels are pretty clear. You just got this cluster, this zone, depending on how you want to draw it and how specific and tight you want to be, anywhere from 272 to 274, and then ultimately this pivot down here right around 270. That's going to be your important level. If we start to lose that level, then you want to tighten up those stops and manage that risk appropriately in case this market does continue to roll over. And then on the flip side, of course, we just have basically the highs from today, which do coincide more or less with the highs from Monday. And then we look back up here to maybe this gap fill around 281, and then the highs ultimately around 286 or so. So that is the landscape for the S&P 500. The IWM is basically the more bear case on the overall market picture. And then the Qs happen to be the more sort of bullish optimistic case here on the overall market structure. So when we look at the IWM, this is, again, the most pessimistic view here out of all of the major averages. You can see we're already back to a very flat-lined 8 and 20 period moving average. We're closing right at them, and we're very much back inside of the range from last week already, and we kind of failed right here, right around 155 or so, which was previous resistance back here from December and January. So for me, the Russell 2000 here is kind of stuck in the very toughest of spots of all the major averages. This needs to get above 155 or so to start really sailing a little bit more cleanly to the upside. For now, this looks again to be, if you're going to short something, I'd probably be looking here for the Russell if we want some short exposure, some hedge. The Russell 2000's been the laggard. We've seen it lag and then all of a sudden make these very sharp kind of moves higher here. Sorry, I don't know if November of 2017 is probably the best example, but we've seen it underperform and then start to stage some nice recovery runs. But so far, from a structural basis, even this weekly chart, you can see it below the 8 period already, and you can see again this important level right around 155 or so. So I think the Russell is in a pretty tough spot there. And we look at the Nasdaq 100, you can see got all the way back to highs, almost made new highs intraday here today, but has pulled off of them. Even with today's 1.24% pullback, look how far above we are still from the 8 and 20 period rising EMAs here on the daily chart. So you can see this could even pull back another day or so and find some type of higher low, find some support, and really this would not do much structural damage at all. We do have the highs back here that are looming, so this level of about 171, 170.50 or so is going to be pretty important right in here. But for now, we're backing off of it, still above rising moving averages, so we need to see how this all plays out for follow-through day over the next several days. So that is the market environment overall. Hopefully that gives you some tactical levels, some different things to think about, different use cases for both bulls and bears there. Let's look at some of the other major markets here. We'll see TLT didn't do a whole lot today. I mean, a good amount of range traded, but not a whole lot got really accomplished. It was basically a flat day, just slightly down. We did start the day higher. You can see we did have a pretty good range, and it's more or less just more chopping around inside of this now sideways pattern for the past couple of weeks of trading. You can see the MACD momentum here, a little bit of divergence as it starts to kind of carve out this bottom here. So I think it just really needs a little more time here. It's pretty messy. Sellers overall in control, but that snapback bounce, again, like we mentioned on Friday, is probably not that much of a surprise. I think it's it's just too messy for me to really get involved in that one way or the other. Next, if we look at oil here, oil sold off a bit today, finishing lower 1.63%, taking out Friday's lows. You can see it is still above an 8 and 20 period that are rising here. We did take out the lows. I mean, if you're looking at this as a potential sort of lower high here, so you kind of had this, we're in this nice uptrend, we had this impulse leg down, and then we rallied back up. If this turns into be some lower high here, this is probably an aggressive entry where some shorts might be trying to jump on the short USO trade here for a move back down below these averages and back into to these old levels that we retraced to a couple weeks ago. I think that that does make sense. Not really my strategy or style there, but I can see the merit behind that. Otherwise, when we zoom out here, this is still very much in an intermediate term uptrend, so you do want to at least respect that or be cognizant of that if you are taking an aggressive short entry there. If we look at natural gas next, it's just not doing anything here. It's really just flatlined, mostly sideways here, just hasn't done a whole lot over the past couple of weeks of trading. The volume's incredibly light here as well, maybe some divergence here based on the MACD, so not a whole lot interesting here for me. I mean, again, a snapback rally higher wouldn't be that surprising. Some expansion in volatility one way or the other is probably going to happen sooner or later, sooner rather than later here in natural gas, but not seeing a whole lot right now. Finally, we look at metals. You can see GLD sold off today. It was a little bit sideways in this range. I was watching it closely, talked about liking this for a potential long trade. Just nothing had ever triggered here in this sideways chop. This was not a convincing enough day here on either Friday or Monday. And then, of course, we saw this move back down to the lows here. So it'll be interesting to see how it reacts around the lows from February, in the first week of February or so. Got a little bit of a bounce off of those lows, but something to still pay attention to. Don't see a whole lot of actionable ideas here in GLD. I guess you could be trading against the lows here from February, but you'd have some pretty tight risk. I don't know if the trend or the near-term trend is too much in your favor at this point. And when we look at silver, silver is we're still short silver. We talked about this trade in silver that we've had for I think over a week now, or actually I think today was the week mark. We got shorted in here on this bar on Tuesday on this move lower here with an original stop loss, basically looking for a stop against this now resistance level right around 1590 or so. Spent most of the week getting pressured against this position until today. It started to make this kind of follow through move or try to expand a little bit lower. It did close off of the lows here, but starting to work, starting to move in our favor here after being fairly patient in this name. Didn't get any profit targets achieved here, but I will be able to sort of trail down my stop a little bit tighter. So I think if this does decide to find some support here and really rally off of this move, then I think a move above 1570 or so is probably my my exit door. But we'll see if this can continue to roll over here. So far, nice session today. I'd like to see a little more follow through to cover some into say the lows here from Friday on the 9th of February. So that's everything I've got for this video. So hopefully you guys are off to a good start here. Pay attention to that follow through day tomorrow, and tomorrow's the last day of the month. It'll be the closing month of February. It'll be the first closing month for the S&P 500 to close red, going all the way back, I believe I have this right anyway, to March of 2017. So it looks like the 11-month winning streak here for the S&P 500 will come to an end. I should probably check that on the cash market, make sure dividends aren't skewing anything. Yeah, it looks like barely closed red here for the month of March for the S&P 500. So it's going to be it'll be the first red close unless we can pull off a 2.5% rally tomorrow, which seems pretty unlikely. But keep that in mind. End of month trading, and I think that's it. So thanks so much for watching. If you like the videos, do subscribe to our YouTube channel, bottom right hand corner. Otherwise, I will talk to you on Friday. Thanks so much for watching.